Newcomer's had a crazy week of stories. Madeline Renbarger took a look at the winners and losers in the Klarna IPO. This was not your traditional venture capital overnight success story.
It had a $46 billion valuation. Would have been a good time to go public then.
Sequoia Capital built in a major position, but there was a lot of money trading hands along the way. I'm sure Tom Dotan, who's here on the podcast with us, will have a lot to say about Jimmy Kimmel's temporary ouster from ABC and the pressure from the FCC chair.
Quoting from his social media post, "I can't believe ABC fake news gave Jimmy Kimmel his job back."
And then this week, I published a story on Andreessen Horowitz's financial performance. We're going to start the show with that. They've returned a ton of money secretly to limited partners, thanks in part to their savvy crypto investments. And so we'll have a lot of analysis on how Andreessen Horowitz has raised its many, many billions, returned some to investors. Without further ado, this is the Newcomer Podcast. All right, this was the white whale to pat myself on the back of venture capital journalism. I think lots of VCs over the years have been trying to figure out how well does Andreessen Horowitz perform. You know, it's a firm fantastic at getting itself a lot of attention and controversy. It certainly made a ton of unicorn investments, but it, spins out money like it's shooting out of a bazooka. And so really wanted to get an answer. How's it doing? Madeline, I mean, you followed Andreessen for a long time. What was your reaction to our story?
Yeah, well, first up, congratulations, Eric. I think that's been our most requested, look behind the hood. What's going on in Andreessen? What are they really doing, And one thing that struck me from the piece, honestly, is I didn't expect them to be doing as well as they are. Is that kind of how you felt in your analysis, too? I think everyone talks about how their rounds are so inflated and they buy out everyone else and their whole game is just, management fees. But it seems like a lot of their investments, especially some of their 2010s vintages, are doing quite well.
Yeah, just to tick through, the headline is the firm returned $25 billion net to its backers. So after Andreessen takes its cut, $25 billion back. Obviously, this is a firm that's raised a lot of money, so it's like, okay, makes sense. Some of it would come back to you, but they have returned a significant amount, and importantly, a huge chunk of it, some $12 billion, was in 2021. And if you're someone who followed tech stocks in 2021, that was madness. That was everybody's investing at terrible prices, at high watermarks. And it's like, what's going on? And I think part of what this story reveals is that in the background, investors were cashing in their winners. So it's like, they were able to raise a bunch of money. A lot of stuff was happening because they're like, we're geniuses, we're rich, we're selling everything at such high prices. And Andreessen, in particular, was able to see a massive amount of liquidity to its limited partners, to its backers in 2021.
Right. I mean, I think, venture funds, we are kind of roughly on a 10-year cycle, right? So 2021 for those vintages, at least per your deck, the 2011, 2012 vintages looked super high performing because about, 10 years exit during the boom. Amazing. And of course I'm sure they had, the companies were good, but, it was also a timing game,
It's funny, actually, Eric. I remember the last time I think that Andreessen's returns were leaked or were in a story was our buddy Rolf Winkler at the Journal had a story that showed that they were pretty good. And I think for some reason, initially, people were skeptical about it at the time, and maybe it wasn't as good as people had thought, but they were solid. And this one, I think, only reaffirms that point. But a lot of time has passed between then and now. What were the big winners?
We don't know all the specifics fund to fund. I mean, Coinbase is a key winner for Andreessen. Yeah, and then flipping, I think crypto tokens has been very lucrative for them, like Uniswap. And there are a lot of stuff. I mean, one of the things I revealed in this story, which you can read the full thing at newcomer.co, but Andreessen has made $422.7 million from crypto staking. So supporting these crypto projects along the way, besides flipping tokens and selling equity in crypto companies. So this is a firm that's found a lot of creative ways to make money from crypto. They're huge investors in Databricks. I think Databricks is still private. My sense is they still own a lot of it, but I think when you think about why is Andreessen so successful, I do think like the success of Databricks is certainly one of the key companies that should come to the top of your mind. GitHub and Slack are two that they've sold out of that did well for them as well.
Hey, what's interesting is that you look at the different trends, like tech hype cycles that have happened in the 10 years. Okay, Databricks, I get it. That's about the growth of databases. That's, big data and that whole industry. So you can see them capitalizing on that. The Uber for X and on-demand world. I guess really Uber is the only big winner. They didn't get anything from that.
They were in Airbnb and they were in Lyft. Lyft ended up not
Lyft wasn't great. That's right. Yeah. They were the Lyft company.
Yeah, but Airbnb was good. Yeah.
Yes. So that was a solid return. What else though? I mean, what other trends were there that mattered? Well, you mentioned crypto, and they kind of won at the biggest company there.
Andreessen's first crypto fund is being held at 7.1 TVPI now after peaking at like 11 TVPI, which I mean, in the weeds of venture jargon, it's very good.
Let's define the terms, which are complicated even to us. So TVPI is total value to paid in capital. So that's like the value of, okay, how does venture work? We raise a venture capital firm, say it's $1 billion. We deploy that money. We invest in startups. Those startups get marked up. We haven't actually exited the position. We still own these illiquid shares, but the value goes way up. We invest in Databricks. Investors say those shares are now worth $1 billion. We say, oh man, our TVPI has gone up by a ton because we've seen the value skyrocket. That is in contrast to another word that venture capitalists like to throw around, DPI, distributed to paid in capital. And that's actual money your investors have gotten back.
DPI is I feel like really one of the most important metrics, right? Because that's actually money back in the bank, money to LPs. That is the cash metric.
DPI takes longer to deliver.
You got to exit.
You have to exit, And so, these are the numbers I got, from source. They're from two different decks. It's clearly like one was, a quarterly update, two limited partners. So it seems like they are, even to sort of the savvy insiders, relying on this TVPI number, which again leans heavily on markups rather than exits alone. But, it's sort of paired with the fact that Andreessen has returned a lot of money to investors. So I think their strategy seems to be, hey, we've given you a lot of money. Therefore, like our sense of what these companies are worth is pretty reasonable. Like, trust us that like you should pay attention to the total value rather than just the money you've gone back, because like, why should we rush to get out of like good companies at high valuations? So yeah, the Andreessen skeptics, and I've gotten some emails from them, will say, DPI, like tell me what exits they've actually had, not like what markups, because, they mark up their own companies. All the VC firms, want to sort of keep these valuations up to the extent possible. So if you're a real
they can always double down
skeptic,
on another investment, right? They can always, do another follow-up round at a crazy, even higher valuation. And then it's like, great, our numbers are doing so well because we keep backing the same company. So it is still all on paper. Just
to tick off, some of the big takeaways. So I said, 25 billion net to backers since the firm was founded in 2009. I think the second big takeaway is, that their top fund, their third fund, was at 9.4x net total value to paid in capital. So it's been marked up sort of an enormous amount. So clearly they have some great funds. Crypto was really strong for them. Bio has been pretty weak, and those funds keep getting marked down. Growth's a little hard to assess. I mean, it seems good. I mean, you sort of need to benchmark them to other ones. But I think pretty strong. But overall, and then I think just this amazing, the other bullet that stood out to me is just how large crypto looms for Andreessen, including making revenue from staking cryptocurrencies, and that they're like telling investors like, man, I never even heard of SUI. Had you guys heard of this SUI thing? I don't even follow it, but like it's driving, like they marked it down by $1 billion in a quarter. Like Andreessen is swinging, like their assets are swinging dramatically on like obscure crypto products that people are not tracking. The last thing, we won't tick through all of them, but if you read the story, I list, they have companies that they think, might go public, which is obviously interesting to a certain set of investors. So I don't know if you're that invested, go subscribe to Newcomer and read the story.
Okay, so you look at the partners that are responsible for some of their big victories. You've got Databricks, which is Ben Horowitz, and he made like a pretty prescient and impressive early bet on
and help the company sort of navigate. I think Andreessen gets a lot of credit to me for
and I did a story at the Journal about Ali and Databricks, and Ben actually made their introduction to Microsoft, which was the first moment where they kind of catapulted outside of just being another startup, and they had this huge Azure partnership, and that was all Ben making that connection. So he totally deserves credit for a lot of their success. Airbnb from a couple of years earlier, that's Jeff Jordan, who's no there anymore.
Yeah, at least if he's there, he's not like he's not one of the listed investors in their slide deck. So
yeah. Right. And then Coinbase, which is Chris Dixon, I think. Yeah. So, I mean, I know this is not uncommon, but for a firm that has I think at last count, 200,000 listed partners at Andreessen Horowitz, it really comes down to three guys, more or less, that are powering all their success.
Yeah. I mean, Mark Andreessen, obviously, it's the brand and the vision, and I think he's close. He's certainly close to some of these deals, and I don't. There are crypto tokens. There was a Slack deal early. Honestly, they had this whole Skype investment early on that was sort of important to them. So there have been others, but yeah, I mean, it's even at this scale where they're raising $3 billion funds. It's home runs, but it's not just home runs where you lead the Series A. It's you lead the Series A and you say, oh man, this is the good one. Back up the truck. And that's why I think with General Catalyst and Stripe, Andreessen and Coinbase and Databricks, you see these firms that are raising massive war chests, really you gobble up a lot of these companies. I mean, we published the returns of Lightspeed a couple of months ago, and they were a little more diversified. I actually had the tables of how each fund broke down, but there were companies like Rubrik where that would be a huge section of the returns for the fund.
Yeah, I mean, even in the decks, they'll make the graphic just this is the companies, these are the companies that have built the big returns. They're upfront about that as well, and when they're pitching their investors.
On the crypto side, and to connect it to Mark Andreessen, I think I was debating this with another reporter a couple months back, but I think one of the impressive things that Andreessen has done in terms of infiltrating the Trump administration is basically setting policy for crypto. And you look at, what they managed to do with the SEC, and I don't know if any of Coinbase, were they ever under SEC investigation?
Yes.
Yeah. In any event, it's obviously a much friendlier administration to crypto than Biden was. And policy-wise, this was a huge victory for Andreessen, and probably drove some of the accumulation in value of their crypto holdings, is the fact that they seemed to play a major role in setting policy. It was very crypto-friendly, and now their stakes are worth a lot more. So that to me is maybe the Mark Andreessen.
And they're going to run the whole playbook again on AI, which I guess I'm more supportive on the AI front. I mean, to me on crypto, the Biden administration, with the benefit of hindsight, clearly fumbled by having their regulatory approach to crypto be we're going to make you afraid, but we're not going to actually tell you whether it's legal or not. And that just created this terrible situation where it felt like the lawbreakers almost performed better than the rule followers, because you were if you were willing to ignore regulators, you survived. If you followed the rules, you got hammered. So I think that was bad. And now it seems like we're in a world where crypto A-OK, and crypto is allowing the biggest public corruption of all time with Trump, in his meme coin.
It's we've swung from too strict. We don't have to swing from too strict to free for all. There is a ground.
The worst, there's so many bad things going on in Trump. We're going to talk about more of them on this episode, but the public corruption of Trump's crypto holdings is egregious, and the crypto world's regulatory work certainly laid the groundwork for what's happening with Trump coins. So I'm certainly frustrated about that, even if I think there's some valuable things to come out of crypto.
If you look at their job as a VC firm, though, they're about returning to their investors. They're all about TVPI,
destroy the honesty of the American government.
If it means that Melania gets a meme coin. Great.
Well, one piece also that I think we haven't touched on from your story is how much Andreessen's media ambitions loom in the future of the fund? I mean, they were kind of the classic, fund that's going to turn into a media company, and they've had so many different media arms that they've tried to do over time. But it does seem like that's a big focus for the firm, right? In what you were
they literally call
in the
it
decks.
a media company that monetizes through venture capital. Like,
exactly.
Man, every media company should be jealous. That's one. And then they talk about the compounding value of content. So at once, it's very affirming to what we in the media classes do. On the other hand, clearly, Andreessen Horowitz has a much better business model than any of us in the media business. So kudos to them. But yeah, what do you guys make of just how seriously they profess to take editorial content and media?
Well, look, like you said it in your initial piece on it, it didn't work. They don't really have this direct line. They don't really have this direct line to the public, to the customers that obviates us. And I'm not even saying this defensively. Like I would have, there are certain examples of, I think, successful media arms within VC firms. Like I think Pirate Wires, they're getting a little weird these days, but like I give them credit. I don't think a lot of the... Yeah. Well, they had some shit about like donating blood. Like you have to donate all your blood. Yeah, I'd love to talk about it with Mike, your buddy.
Yeah.
But listen, on the Andreessen stuff, like it's one of those things where like if you were successful, you can claim any rationale for the reason you were successful. So the numbers that you have prove they've returned money, or they have prospective money they can return to investors. They're a very successful firm. Also, they have this media strategy. Whether the media strategy is responsible for their success is very debatable. And I think like they can dictate the terms of that because they are successful, but I'm very skeptical.
So one of my early viral stories was in January 2021, and it was the unauthorized story of Andreessen Horowitz. And it was basically arguing that Margaret Wenmakers, their chief marketing officer, was like sort of the third most important person at the firm, that she'd basically helped Ben and Mark build up this reputation in the media. Mark famously penned an op-ed that said software is eating the world in the Wall Street Journal. Like that sort of using the media both through like op-eds and being quote machines and leaking and whispering, like was key to Andreessen's strategy on the way up. And then sort of during the pandemic and Trump won, Mark Andreessen's politics change, maybe Margaret's politics change, and the firm just sort of sours on the media class. And all of a sudden they're not cooperative, they're hostile, and they're trying to build their own apparatus. And I think that's when I write the story. Then they try to launch Future, which is I think what Tom is referencing, which is their own publication. Like, we're really going to do it. It's going to be a media property. And that thing like fumbled almost immediately. It felt like they had no day two strategy. They had a bunch of posts on day one, and then it's like, what's the plan, guys? The problem with media is you have to keep doing it day after day. So that failed, but like they were dominant on Clubhouse when that was cool. They have Mark and Ben have a very successful podcast. They,
not a top podcast
though. Compared to the venture industry, they are the noisiest and most paid attention to. Compared to like Mr. Beast, they're smaller, but their podcast is bigger than this one. So like we are a media business smaller than theirs. So it depends how you measure their success. And then the latest is they've hired Eric Tornberg, the founder of Turpentine Media, to be a true general partner and try and again make them successful influencers.
To me, the only thing that I think they deserve credit for as a media entity is crypto policy. I just think like they spun their brand into a way that got influence in the Trump administration, which was very responsive to podcasts, to apparently, scammy crypto, schemes. But if again, like going back to the things that drove most of their success, Martin Casado, Ben Horowitz he's somewhat of a figure though, although, he's a little bit more like middle of the road, I think, than some of the extremer takes coming from people like Mark Andreessen. Chris Dixon, not out there all that much, not a very aggressive, media attacking figure. And then Jeff Jordan, who again is not really in the picture all that much. So I just really want to push back on this idea that it drove their success. Like they made a lot of savvy bets.
A key insight of Andreessen Horowitz to me was that the real constituency is the founder. And that normally in like finance and old school venture capital, the people you're trying to communicate to are limited partners. And limited partners are sort of conservative. They're the investors in venture capital firms. So you have this sort of like austere, like reserved brand that sort of says like, we're the gatekeepers. And I think Andreessen realized, no, like founders are the customers, because if we can get great founders to care about Andreessen Horowitz, then they'll take our money. We'll have great returns. LPs will be happy. Like forget LPs. Like obviously we do some, they do some to make LPs happy, but like the customer is the founder, and they hammered that message. And so while it's not like competitive with the New York Times in terms of reach, I think founders heard, I need to go to Andreessen Horowitz if I want credibility, if I want all these platform tools. And I think that message was received. And that's part of why Andreessen's been able to get sort of the exits and the investment level that they wanted. I don't know, Madeline, what do you think?
Yeah, I think you're onto something there. I do think that by focusing on founders first as sort of their audience rather than the LPs, they have attracted, people view them as the fund that you want to get to help build your cap table, even if, of course, there's equal amounts of skeptics that say, oh, Andreessen will fund anyone. Like, clearly, based on these returns, they've done quite well. So founders know that. Founders want to check from Andreessen, even if it's, at some inflated valuation, because it adds the prestige. So they're clearly conscious of the brand. I will say, though, kind of to Tom's side, I just think it's tough given like how unsuccessful their media ventures have been. I mean, obviously our podcast is smaller, I get that, but like it just to me seems like they shut it down. Like the clubhouses didn't work. I don't know. But they do try things. I'll give them that.
They jump. They're not wildly, they're somewhere in the middle. Their media efforts,
yeah,
but
their media efforts are middle of the road, but their branding efforts and their marketing and brand is very successful.
Yeah,
and that has been huge for them. Of course, VC firms are brands, but I think more than anyone, Andreessen has perfected that as a business model.
Yeah. All right. For our second story for this episode, we wanted to talk about Jimmy Kimmel. It's an irresistible topic. Newcomer, here at Newcomer, we're obviously very focused on how our business is doing. We try not to think about the government too much, but then sometimes, especially in a strongman democracy that we seem to be living in right now, the government looms too large. So we felt compelled to call out the meddling from the FCC and the Trump administration in the case of one Jimmy Kimmel. So we said business leaders dance to Trump's tune. The Trump trade is ethically bankrupt and riskier than it seems. It's time to sell. This was sort of a team effort piece. So this is not my line. I think Jonathan Weber, our editor, pulled this. He said, as a matter of personal and professional ethics, we're quite surprised that people with plenty of means who have climbed to the summit of corporate power have opted to grovel at Trump's feet. He's obviously talking about, Disney basically capitulating here, and Bob Iger, like, why'd you roll over? And we write, we understand that Trump represents a real threat to their business interests, but as the priceless line from Billions goes, what's the point of having fuck you money if you never say fuck you? And that was the piece. And like, I do think enough people sort of shouting like, man, Iger, etc., why are you guys so weak here and spineless, got ABC to sort of like reverse course, bring back Jimmy Kimmel, and hopefully hold the line. I don't know. Yeah, Tom, I mean, you follow media so closely. Obviously, you lived in LA for a long time, wrote about Hollywood. Where do you see, we made this sort of a business story, but it's really a Hollywood story. What do you make of it sort of from inside Hollywood?
It's so funny how in the midst of a crisis, everyone becomes experts on the topic that just popped up. So remember when everyone was like experts on NATO after Russia invaded Ukraine, and we became extremely knowledgeable about like the ins and outs of like membership countries in NATO.
Yeah, during
and crossing
COVID, everyone became
lines.
Virologists.
We were epidemiologists and virologists. So now we're all ratings experts. And, the smart conservative take after Jimmy Kimmel was like, this was them cutting bait. This was ABC cutting bait on a low rated show, which is just like, I understand that was the spin that Paramount gave when they when they announced they were going to be shutting down Stephen Colbert's show and getting rid of the late night franchise entirely. This was completely like wrongheaded, and just goes to show that like, kind of self-professed experts and, quick studies on a business that they otherwise have no fucking clue about, really leads people to very, very dumb ideas, which is like ABC has been dying to get rid of Jimmy Kimmel all of these years. And because of a controversy, they cut bait mid-episode, just before the recording. So they,
It was a good show. Like, you think it was like a well-positioned show for ABC?
No, I mean, it was, yes. I don't even know where to start with these things. Like, late night as a genre has been in decline. If you look at the ratings, no one really watches broadcast television anymore, and these shows that air at 11:30 on local affiliates are not enticing to most people that watch TV. The views on YouTube far outstrip what the live ratings are. So anyone who's trying to make what the reach of these shows is based on its TV ratings doesn't take into account that these are basically web shows at this point.
And I was listening to Bill Simmons. He's making the point. Jimmy Kimmel leads ABC upfronts. He's like a big part of the ABC brand. Like they use him for a lot of stuff.
They like him. They like him. He is a huge.
You're responding to the disingenuous, like, argument
but
about
it's a smart take. Like that was the thing that annoyed me, right? Like that became.
That was the
Oh, I really know how the business works.
Some of the publications that we. It feels like a real Dylan Byers take, but maybe he didn't write it.
No, Dylan, as much as I really despise the guy, and I don't mind saying that on the podcast, as much as I truly dislike him and what he does as a journalist, like he understands how media works. So he wasn't dumb enough to really think that that's what was going on.
But also it's classic Trump that Trump keeps me like, even after Jimmy Kimmel came back, he's like, no, I'm trying to get rid of like Jimmy Kimmel. Literally like tweets out like, I got ABC. Yeah. I basically extorted ABC for like $19 million or whatever. Maybe I need to do that again. It's just like all these conservatives like, try to come up with the most like, fair-minded
intellectual
free speech, like
business rationalist reason for this. Right. And then it's just like, no, I did exactly what I said and I'll do it again.
This is why Trump is like maybe a uniting figure in other ways, because he just fucking says the thing that is the most basic and like unenlightened version of what's going on. Like you have all these people trying to create the intellectual framework for Trumpism, and it's like, no, it's just this guy's peak and ego, and he has no interest in standards and checks and balances and all that shit. So.
I mean, the FCC chair literally said this can go the easy way or the hard way. It's just like it's literally like a mafia-like behavior. Yeah.
Oh, I saw some people trying to say that like it was unfortunate that he said that because it was somewhat coincidental to the effect. Like had he not said that, it's possible that Sinclair and Nexstar would have still
away with it. Like
right. Well, they wouldn't have had like this sort of smoking gun of First Amendment violation on a fucking podcast. Right. So it ended up kind of being counter to the truth, which was really that ABC has just been dying to offload Jimmy Kimmel, which is so dumb. But I mean, look back to the tech angle of it, if we can try to like keep this somewhat grounded in what we're supposedly experts on. I mean, like one of the biggest things that you saw coming out of like tech support for the Trump administration was the bridging of free speech on the platforms, right? That the Biden administration leaned on Facebook and leaned on Twitter, obviously, with the whole Twitter files things to get ideas that were not publicly acceptable. I don't even know which were the ones, because a lot of the stuff happened during Trump, like maybe lab leak theory. I guess the Hunter Biden laptop was the number one thing that they point to. But this became like a core animating philosophy for Trump supporting tech people, that like Biden was anti-free speech. We believe as our first principle that free speech is the most important thing in platforms and everyone should be allowed to it. They were not as outspoken as they probably should have. But there were definitely some I saw out there saying like, this is mildly concerning, The content moderation stuff is a minefield that like, oh my God, it's almost like a whole nother can of worms. But your point here is just, if the shoe was on the other foot. They were so animated during the Biden administration about the influence on social media and the impact on free speech. Their rallying cry was free speech. And here we were, the media class, being like, well, it's not really free speech, quibble, quibble, quibble. And now you have like what feels like very direct speech. And like a lot of people are silent. I mean, Ted Cruz and others did speak up. I think Mitch McConnell, Jimmy Kimmel in his monologue on the comeback thanked, Ted Cruz for defending him, basically. Right. So there were a couple, but it's always disappointing that people can have free speech as a rallying cry when they're in the opposition, and then
not stand by it.
Yeah, and if it truly is like your first principle that is the most important thing to you, then like you really should have been a little bit like, sure, there was support for him. They should have been madder about it, because if the shoe was on the other foot, they would be apoplectic. You know, if this was, Biden in charge and he got, I don't even know who the allegory would be on the left, but whatever, like
Greg
centrist or right wing version
taken
that
off
was
the
like
air or something. Yeah.
Well, but he's on cable. I mean, that's the problem. Like, it's such a specific issue with because the FCC
with ABC
oversees affiliates. They don't oversee cable, so you can say whatever the hell you want on cable. So anyway, I don't have the perfect analogy here, but the fact is, if this was, and I think I was complaining about this, Eric, in a group chat that we're in, like, if this was about like, because the initial claim about why it was okay for Brendan Carr to like threaten Jimmy was that like, well, implying that, Tyler Robinson was MAGA is just false. Like, you're spreading misinformation, and, there should be consequences for spreading misinformation. No one really knows what his beliefs are, this guy. We have
right,
like
did you see
minimal
Joe Rogan?
theories.
Joe Rogan's like, oh, he really offended people by going against the narrative. Not that I really accept the narrative. It's like this insane, like, they're all mad, but they're also all conspiracy theorists. So at once it's like, okay, we're going to get really angry that you're defying like the government narrative on what happened. At the same time, we're the conspiracy people who don't believe it. It's just like, why are you guys so mad at Jimmy Kimmel? Besides, like, you've all, I don't think there was that. There was some organic groundswell, but this was clearly like top down. You didn't feel like the anger at Jimmy Kimmel. Like, I don't know. It did not feel.
Well, I didn't. I mean, a lot of the reporting on it was just like this viral clip of Jimmy Kimmel saying this. I had never heard this monologue thing until the Brendan Carr incident.
Right.
Like, I don't remember
Exactly.
everyone kind of being extremely mad. And who had a great column about this? From the ropes was Nate Silver. Wrote a piece that was kind of comparing it to like the post 9/11 environment, where everybody was just so uneasy about what you were allowed to say on air, and if you could kind of cross the administration. And hilariously, the analogy that he brought up was, Bill Maher hosted this show Politically Incorrect, and he got into hot water at the time because he very bizarrely said that the 9/11 hijackers were more brave than the Americans who were like raining missiles on Afghanistan. And that really pissed off the Bush administration, and he ends up getting canceled and replaced with Jimmy Kimmel. And that's kind of the beginnings of his show, was after they canceled Politically Incorrect. But his point was like, the environment we're in is so similar to, the post 9/11 moment, where there's just so much apprehension and warring factions over what is allowable speech.
Mark Elias, the Democratic lawyer who rightfully feels very dismayed that all these law firms and media companies are capitulating to Trump. Mark Elias argued you should build anti-fragile institutions. And, I am proud that like at Newcomer, we can, it's easier for us, It's like we can hold the line seemingly more comfortably than ABC and CBS, partially because it's like, who the hell are these guys? But also just like we're not dependent on, Trump to approve random mergers. Yeah. And so there's something nice about just being independent. Most, obviously we have different revenue streams, but none that seem pressure points from the Trump administration at the moment.
We should talk about that for a bit, actually, because like I don't want to be too self-aggrandizing and congratulatory about like, us making our money from independent media. But like, if anything, I think it is, if there's anything to be learned from this ridiculous episode, is that like corporate media as an entity is increasingly useless. If they're not going to stand up to the administration in a serious way, then what value do they have?
Right.
Like their business has been under attack for years, like just as a financially, their audiences are shrinking. Their hold on the culture is still there, but I think increasingly tenuous because of like mainstream distribution platforms and the video that comes out of that. So like, and you look at these people that end up kind of getting kicked off of mainstream television, like Stephen Colbert. What's he going to end up doing after he leaves CBS? Probably he'll do a podcast, like Jimmy Kimmel.
And he might be more influential. I mean, that was the thing with Jimmy Kimmel. He would probably be bigger.
Yeah.
Well, I don't know. Do you believe that? Would he be bigger on his own?
Well, I mean, you could look at the Conan example, right? Like Conan's podcast is wildly successful after he got canceled.
Definitely better than TBS. Yeah.
Yeah.
I mean,
so
daytime.
I mean, obviously TBS is smaller,
Right.
but you could make the argument that he could, have built something quite successfully independently
Right.
after this. He's back on the air, so we don't know. But other
Right.
people have done this before.
Yeah. So like the culture wars may still gravitate towards things that are coming out of mainstream media because it's closer to a monoculture than anything else we have. But like the trends are so clear right now. And I like there's this sports podcaster, Dan Le Batard, who's like ESPN, former ESPN. And he was making this point pretty smartly that I guess I said earlier, which is like, what's the value of corporate media anymore? If they're not going to do anything substantial, use what remaining pieces of power that they have to push back on this stuff. And I don't know, like it makes me feel good about where I'm at. Like I was at the Wall Street Journal yeah, I mean, like I was at the Wall Street Journal for a couple of years. They, by the way, like did a really bad job covering the shooting and put out a story with a completely inaccurate headline about transgender
right.
ideology being
Right.
a key part in why this guy killed Charlie Kirk, and they've not done a very good job
because
apologizing
there was
for
something
it.
wrun like notices bulge OWO on the bullet, like some meme reference? Like it's not even, how could you even,
There was a law enforcement brief that, they accurately reported that there was some law enforcement brief, but it's like, you need the underlying thing to be true. And it was weaponized.
You need to
so
see
much
what the
by
brief
conservative
says.
media. Right.
Yeah. So I guess we'll see what happens, but I wouldn't be surprised if we 5 years from now and look at the growth of independent media and see, the Jimmy Kimmel moment is at least very indicative of where the power balances are and like where the momentum is headed. And what it means for like a united society is a whole other thing. If everybody is like, reading the various Substacks and podcasts and whatever that they agree with. But it just seems like there's no turning back from it. And if corporate
Right.
media doesn't have anything, foundational to what they do that gets people interested in them and finding that they have value, then like it's not going to go well for them.
With that inspiring point for independent media and sad point for corporate media, we can brag about one story we're proud of. Madeline had a great story on the buy now, pay later company Klarna, which went public a couple weeks ago. Stock price is down marginally, but still way up from the depths of the post-21 heyday.
Still, way up from its
Lots
2022 mega down
highs
round.
and lows for Klarna. You want to give us who are the winners and losers in terms of the investors in the Klarna IPO?
Yeah, absolutely. I would say Sequoia is a very big winner. Sequoia got in at the Series A and got about a quarter of the company there. I think it was, Chris Olsen at the time was the principal who made the introduction of the Klarna founders to Michael Moritz. They liked the idea. They bought on. Back in, I think it was 2010, but the company had been founded in, 2005. So, it had been working along in Europe, but this was the first big VC.
I was very proud, by the way. Somebody DM'd me and like, Chris Olsen really found that company for Sequoia. And I went and checked. I was like, yeah, that's in our story. Like
that's what we wrote.
I'm glad you had that in there because it's like it's easy for the junior part. I always like that in these stories, the cap table. Like who's the the big famous partner on these good deals? It's like Mike Moritz takes the deal, and obviously they do a lot along the way, help the company succeed, and then founders are often loyal to that person. But yeah, Chris Olsen, who's still an investor, I think at Drive Capital, sourced the deal for Sequoia.
Yes. So important credit where credit is due. But Sequoia, I think, followed, I would say, the savvy venture model the closest with the Klarna story over the 20 years it was private. They were coming in when it made sense and then, advising the company along the way. But they savvily held out of the crazy, super high inflated valuations and the just everything's online shopping, post-pandemic, interest rates zero, 2021 rounds. So Sequoia did not invest in either of the two really big SoftBank rounds that were led then that happened then. And then they came back in and bought another huge bulk of shares when the valuation was down to, I think, $6.7 billion in 2022.
That's key.
And
that fits in our first segment of the story, actually.
Yeah.
First segment in this podcast, 2021. If you wanted to make money, you needed to play that the right way.
Right.
You needed to sell And so, or sell or at least not buy. And in the case of Sequoia, they did not buy Klarna shares at what, like a 31 billion valuation.
Yeah,
is that
I
right?
think it got above
billion?
40. It got above 40 at one point too.
Oh wow, okay. And now it's worth 16.
for the second one.
16.
And now it's worth 16. Yes.
So you could
Yes.
you should not have been buying like SoftBank in 2021.
Yes. Correct. But another player, to your point again about buying smart and selling high, the private equity firm Permira came in, which I think had been undercovered at this point around kind of 2017, in the middle of the sort of rapid growth phase for Klarna, and then exited pretty much half of their holdings in 2021 at the peak. So they are no longer, they're not on the S1 or the F1 because it's a European company, but they're not on the F1. Their name isn't mentioned, in the current large stockholders, but they exited in 2021. So it was an incredible deal for them. Versus,
this guy was a
SoftBank came in.
principal at the time. What's his name? We need to give credit
the partner
where
who did the
credit is
deal
due.
was Andrew Young at Permira, who's still there.
Congrats.
But yeah, congrats to Andrew. Seriously, I mean, it was.
We have to do our little
it was
TBC, and
sad.
they have gongs and shit when people are doing it. We're not quite that shameless.
We're not
but
quite
winner,
there yet.
Andrew Young, the
Ding, 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 ding.
DST and General Atlantic, they did okay, but not great.
They did okay. Yeah, they came in, so that's another point. I would list them in sort of the mid-tier because they came in, in 2011, right after Sequoia did, but then they exited in that round that Permira bought in. So Permira bought some of their shares as well when they came in the middle. And it was a solid exit, but it was, kind of like a 2.5x-ish when you could have had something a lot bigger if you had held. And both Sequoia kind of doing the classic way, get in early, advise the company, venture model, biggest steward, largest shareholder outside of the founders, they can claim that they can be the best venture firm. But Klarna, I think, shows that you could have won big on this without doing the venture playbook, frankly, because it was private for so long. And now we have all these unicorns that have been private for so long, too, that I feel like we'll see more of these wins in the middle than we used to.
Yeah. To step back, okay. So whether you're a venture capitalist or an investor, like what lessons can you learn from this story? I think there are a couple, and you guys are welcome to jump in with some. I mean, I think one lesson is if you invest in a good company and hold for a long time, you'll do pretty well. I mean, Sequoia bought early. The company had lots of up and downs. They believed in the company. Now they're up at the IPO. So I think that's one. The other is sort of the opposite, which is if you're going to trade things along the way, you really need to be smart about where you are in the market, because there were people who came into a good company in 2021 and that was a terrible deal. And there are people who came in before that and sold out. You could come in after 2021 when there were all these markdowns and you would have done well. So you do sort of need to get the timing right.
Yeah, exactly. To your point, yeah, if you would have come in at 2022, you would have been up at IPO, and that you have only been in the company for a couple years before they went public versus, holding the whole way through. Sequoia does have the largest gain on capital of any of the firms, to be fair, though. So I will give points to the venture model there. They made the most raw money, but
the case against Sequoia is the time value of money, right? They had to wait a long time to see these returns.
15 years.
I would rather be Permira in this case. I'd rather build the institution of Sequoia, supporting founders, like going along, being sort of reliable. Like I think a lot of credit to them and just like standing by a good company and a good founder. So I think that's admirable. If you were optimizing purely for let's make some money, do a good deal at the right time in the company's history, exit when everybody's losing their fucking minds and be like, this is too much money to like stay in this company forever. Like Permira as a financial institution played it really well. All right, well, great story. We'll have more stories in the cap table. It seems like IPO activity is picking up a little bit. So I think we're going to try to revive this format and track who the winners, mostly winners, I guess, when you're going public, but sometimes losers like SoftBank, no offense. Yeah. Thank you for tuning in to this week's episode of the podcast. Listen to new episodes every week, wherever you get your podcasts, and subscribe to the Substack at newcomer.co.